Well, hello everyone. It is Friday, August 12, 2022. I am Delbridge, Benchmark Realty, Murfreesboro, Tennessee. This is your status chat. Let's get to it. Well, in the middle segment, I like to provide the full link to anything I discuss in the description of the status chat over on the YouTube page where that status chat can be found. Now, you're watching one now. Now, today I use two sources. I use my own website and I use another website, which I haven't used before, and I have to put you some caution to this when we go there. Here it is. I'm not familiar with Real Estate's Guru. I don't see an author's name down here underneath this line right here. I see a date only as 22 hours ago, and I see that it is a .biz situation going on up at the top. It is showing a secure line, and when I look at this by clicking some of these other links up here, it appears just to be a bot scrape, or where a robot's gone out and grabbed people's information of value and stuck it on their website. They call it Real Estate Guru. So when I look at that, I have to give you that level of caution. Here's a big scary chart. This line right here is actually what I was looking for. I have used the man in the past, his work, Lance Lampert. He contributes to Fortune magazine. A lot of times when we look at stuff, we'll have a contributor who will use a magazine to kind of pump his content out there. The content that is then regulated by the publisher of the magazine, they may have their own thing. This time, when I looked at his latest article, it popped up behind a paywall, and I don't have a subscription to that magazine. His other articles were free and available for us to look at any time we want. Today it was different. So I went to see if he has a personal blog where his information shows up elsewhere. It did. Now, looking at this says month-over-month shifts in U.S. housing inventory. This is national data. Don't want to spend too much time here, except that we see this is shift, this is the change, and we see the beginning of showing season always happens in March. March of 17, March of 18, March of 19, March of 20, and then we have all of this negative. It looks like where the bot scraped it may have had a pointer on this point in July, but this right here is what I call pent-up demand. It should be on this side of the line, okay? It's not, because we had the unconstitutional and the draconian shutdowns happen during this time frame. So it shut it all down. Now we come back. We're a little bit late getting started in 21 in May, to be positive, and we're back to normal with a March start of showing season. How does that compare to our local data? Well, this is my personal page, from calldelltosell.com, Benchmark Realty. We're looking for this tab right up here called MLS at a glance. Because if you just have a general place you're looking for, I want to show you what the whole Middle Tennessee area does. Let me zoom in here a little bit, because I want to look at this chart that is the entire MLS. Now, when we look at it, we're going to compare back and forth. Now, what does this look like to you? It's fairly cyclical, right? Down in February, the coldest month. Down in February, coldest month. Down in February, the coldest month. Down here, it's March. So something's gone on. We've had a tremendous year this year. So what we see is a very cyclical type of event compared to this, which has been disrupted significantly in 20 to 21. We did not see the 20 to 21 disruption, did we? We don't see the big change 2021 that we see in this report of the National, because we are an outlier. We have a lot of things going on. Now, I'm going to skip all of his verbiage. The green one is just saying that the inventory shifts between March of this year and July of this year. Everything's green or not showing at all, or neutral. A lot of this area is not accounted for in the data, but we don't see anything in the red. Now we come down here to the inventory shifted between July in 2019 to July 2022. That's a 3-year period, right? From 19 to 22, it's saying that our area has decreased inventory by 32.55%, and that's July. Well, let's find July of 19, June, July. That's 18,851, so that's almost 19,000 to July of this year, which is 13,000. So we're having a net less inventory than we had normally. Go back to our show here, over here for Mr. Lampert's information. Now, the next thing I want to get down here, they talk about disconnected from economic fundamentals. That's because we don't fit the pattern anymore in our area. So here we have a scatter plot. The top of this one says significantly overvalued housing markets are seeing inventory rise the fastest. So that almost sounds like we have a disaster cooking if we're overvalued and inventory is jumping up quickly. So here we have the axis, overvalued, and we have 4-month change. 4-month change is by Realtor.com between March and July of 22, and the overvalued is a calculation from Moody's Analytics. So that's where the numbers come from. So the suggestion is, if we're up here, we should be in a scary spot because we're overvalued, we're high in overvalued, and we're high in percentage of change. CBC San Francisco, high in percentage of inventory change, but not that much overvalued. Here we have, what is ID? Idaho, Boise, Idaho, it's high in overvalued, around probably say 70% overvalued. They probably have some very fast growth. And the inventory is going about 275. It's come up about 3 times, a little less than 3 times its value. Well, where do we exist? Well, here's a dark green dot. I guess they were hovering over Phoenix when they scraped. But right there we are, Nashville, Davidson, Murfreesboro, Franklin, Tennessee. And it says that we're about 55% overvalued according to Moody's Analytics. And we're having about a 275 or so percent change over 4 months in inventory. Sounds pretty darn scary, unless you have your interpreter here to help you understand what's going on. Let's look back at my page. Where are we? Yes, we have upsliding in inventory, but whereas our inventory is down here compared to where it should normally be in July. If we compare Marches, which is this one down here, we would be at 9,775 for 2022. 2021 is at 17,319, and 2020 would be at 18,907. So our 9 is about half of what it normally would be. So we're about half the inventory we would have been then, and even our current July amounts of inventory are behind average. They're behind where we should be. So when we look at a chart like this that seems to suggest that we're slowing down in inventory and we are significantly overpriced, that's making it look like we have a problem. Back to my website. All right, what is our days on market? In the entire MLS, look how we've come down, and we are now down here. The entire MLS, the median days on market is 4 days. If we have inventory increasing and we're still tripping it at 4 days on the MLS, we're still selling well. In fact, that's the part we need to talk about, how deceptive some of this headlines and clickbaits can be to us. It can cause us to want to delay our decision when we're biggest threat isn't inventory levels right now, but it's the change in affordability. We had extremely cheap money allowed that price to jump way up high. Now that we don't have cheap money, our mortgage rates, what we can reach up and grab, depending on most of our averages, our incomes and ratios and whatnot, is bringing that down. That's that 110 rule that we spoke about last week. Every 1% rise in your interest rate on your mortgage typically means you can buy 10% less house. So we shot up very quickly in an abnormal fashion due to that cheap money and extremely high demand from the blue states post-COVID coming to us. They swamped us, actually. So we have lots of people looking, short inventory situation. Nothing has really changed in Middle Tennessee except for that threat of affordability caused by the mortgage rates. So let's go ahead and get to the rest of the show. Hello, I'm Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, Call Del to Sell. That's 1 L and Del, no spaces. Watch the demo on Real Scout, and then call me and we'll set up your exclusive ad-free account today. Now that we got that done, what does that really tell us? Well, all I was trying to show you is that something when we read in the national media can be absolutely true, but false in the impression as it applies to us in the Middle Tennessee area when it comes to real estate. What we did even further in there is we looked at it, we broke it out looking at my database, my website. We show you that things are still looking good. We are still way below normal. We have a median days on market around 4. It was that we showed you, and we show you that we're about half of the inventory we really should be expected to have. Yes, we're growing quickly in the amount of inventory that we have, but that's good for the buyers, and we're still below average in the amount of inventory we should have, so that's still good for the sellers. We're still a good time to do it. Where our threats are coming from are the irresponsible spending we've got that has caused all of the inflation and the reaction of the Fed to raise rates. That doesn't really trickle directly to mortgage-backed securities, but it does have an effect. The overall market or health of the economy does have an effect on it, and it's smacking us pretty hard there because we have the 110 rule that says for every 1% your mortgage rate goes up, you lose 10% of house. Meaning your payment, if your payment's fixed, when they charge you more for interest, it maxes out the purchase price because obviously you're fixed by other means. So that's what's kicking us there. The other part that's really hurting us is the growing debt on the credit cards and revolving because we just came out of being shut down, not being allowed to work, loss of income, we depleted a lot of savings. Now we're getting hit with higher interest rates. The prices of the houses are still remaining pretty darn steady up high. They come down a little bit, but what's really kind of coming down is that gap over asking towards asking price, and it's throwing some of the most recent comps out of whack a little bit. So we're getting in to a more reasonable time of marketing. And it's still a great time because you're going to have to fight the next Fed jump and its influence on mortgage-backed securities. So let's get to those numbers. Last week we had, week of 8/5/22, we had 15,802 opportunities in the Real Scout system. That's up over the previous period. We had 4128 in the under contracts still showing. That was a decrease over the previous period. And the ratio between those two numbers is 26. It dropped a percentage point like it has the previous week after week after week. This week, 8/12/22, we had 16,192 in the opportunities. That continues to increase. And we had 4104, which is a very slight drop in the under contracts still showing. And the integer ratio between those two did drop another percentage point to 25%. So what is it showing you? It's showing you that we still have record low inventory. Our mortgage rates are typically still pretty darn low, but they are beginning to affect what kind of house, what is our maximum price we can look at. And we do see that we still have people migrating into Middle Tennessee. We may be 55% overvalued according to Moody's analytics, but the reason they are is because people want to live here. They want to come here. They're competing for your homes. So all in all, it's a good thing, not a bad thing where we're sitting right now. What the future holds, I don't have a miracle ball. I don't have one of those crystal things that'll tell us what the future is. Neither do you. So come back to my channel, to my weekly blogs, and see what's going on. I'll talk to you like a human being, not like a salesman and not like a henny penny who's telling you the sky is falling. I try to give it to you straight. CallDelToSell.com.